Do you know how much you're paying your financial advisor? My guess is you don't. But it's not your fault because, well, imagine if you went to the supermarket and none of the items you were filling your shopping cart with had any prices on them. Then suppose that when you went to the checkout lane to pay, they scanned all your items but told you, we don't give you a bill here, we'll send that to you. And by the way, that bill will also include your electric bill or some such other bill, and it won't be at all clear how much you paid for what. That's a pretty close analogy as to how the vast majority of financial advisors charge. Stay tuned, everyone. Hire a fee-only financial advisor and know what you're paying. Coming up. Hey everyone, it's Jeff Drayton, Certified Financial Planner Professional and founder of Jeffrey A. Drayton Financial Planning and Wealth Management, LLC. Today's topic is one that is near and dear to my heart. It is the topic of how you choose to pay for your financial advice. And as a fee-only financial planner, the model I use is by far the minority way in which people in my industry choose to get paid. How uncommon is it? Well, for context, a quick Google search would tell us that there are approximately 1/3 people in the U.S. who call themselves financial advisors. Of those, about 20% or close to 65,000 have the Certified Financial Planner designation, and about 3,000 belong to the National Association of Personal Financial Advisors, or NAPA, which is the largest organization dedicated to exclusively fee-only financial advice. So, from 1/3 down to 3,000. Less than 1% of all financial advisors are fee-only. So what does the term fee-only mean, and why would it be significant to you? Well, when you hire a fee-only advisor, the only revenue that they will receive will be that which is paid directly to them by you in the form of fees for services rendered. They don't earn commissions by selling you something, they won't receive sales load revenue by recommending to you this or that investment, and they can't earn referral fees by sending you to someone else who will. How will a fee-only advisor charge? Well, there are a number of possible models. They might charge as a percentage of assets that they manage, the classic assets under management or AUM fee. They might charge a flat fee, one price to provide a plan and possibly manage your assets, or they might charge an hourly fee, similar to the way one might pay an attorney or accountant. The common thread among all fee-only financial advisor revenue models is that which you pay, their fee, will be transparent. You will always be able to say, right down to the penny, what your financial advice cost. So how does that compare to how the advisor who is not fee-only might charge? Well, it is pretty much the polar opposite. I've been in this industry for several years and have worked under a variety of models, and I can say this: if you were to come to me and ask me to tell you how much you are paying your non-fee-only advisor, it would be a research project for me to try to figure that out. And I doubt I would succeed. I would certainly have no prayer of telling you what you are paying right down to the penny. If that doesn't sound good, let me go a step further. That non-fee-only financial advisor that you are working with, he or she probably doesn't know either. Or at least, giving you a straight answer to that question would not be easy, not even for them. You see, the system of commissions and sales loads and all the other gobbledygook that is so inherent to the way the majority of the financial advice industry charges is so opaque, so convoluted, that it is confusing for everyone involved. You see, advisors who are not fee-only have multiple revenue streams by which they get paid, and those revenue streams are complicated. They might earn a commission should you buy an insurance product like a life insurance policy or an annuity, and this commission can come to them in a variety of ways. They'll likely earn some amount right up front at the time you bought the policy or investment product, and they very possibly will also get paid some amount of additional revenue over time for as long as you continue to own that product. And purchasing investments such as a loaded mutual fund works in a very similar manner. Depending on what type of share, or what is referred to as a share class, you purchased, that advisor might earn some amount of money right up front, and then again, a trailing stream of revenue over time as you continue to be invested in that fund. These loaded mutual funds typically have included in their expense ratio a type of fee called a 12b-1 fee, which is simply an additional expense so that the investment company can make a payment back to your advisor or broker theoretically to cover their marketing and distribution expenses for having recommended that fund. In these types of funds, trying to parse out how much of the internal expenses of the fund are going to, say, the investment management, what one might consider to be a legitimate expense, versus how much is this additional sales expense isn't always easy. Fee-only financial advisors are not able to receive revenue from any of these types of sources. Commissions, sales loads, any compensation that did not come from you, the client, directly, but instead was provided by another party as an incentive to encourage the advisor to make this or that recommendation, is not allowed under the fee-only model. One cannot call themselves a fee-only advisor if they receive any of these additional sources of revenue. Unfortunately, something that can sometimes be challenging in the financial services industry is to even know whether or not your advisor is a fee-only advisor. There are confusing terms in this industry used by some advisors, such as fee plus commission, or even more insidious, fee-based. These sound conspicuously like fee-only and seem to suggest a fee-only relationship, but are really nothing of the sort. Both of those terms mean that the advisor might charge you a fee for providing their advice, which could be in the same form as all of those mentioned earlier for fee-only advisors: hourly, flat, or AUM fees. However, when it comes time to implement their recommendations, should those recommendations include the purchase of an insurance policy, an annuity, or a recommendation to buy a sales load containing fund, they are then free to earn the additional revenue that then might come to them from selling you that policy or product. That fact is required to be disclosed, and therefore no doubt will be in some such stack of disclosures that you will be asked to sign. But one might have a fair amount of skepticism as to whether or not every client working with this type of advisor has a complete understanding as to the true difference between working with a fee-based advisor and someone who is providing actual fee-only advice. The fact is, fee-based advisors or fee plus commission advisors are advisors for whom commissions and sales loads are likely making up a significant portion of their revenue. So how can you tell if your advisor is a true fee-only advisor as opposed to one of these deceptively similar such sounding advisors that is actually not at all the same? Well, you could ask, as in, Mr. or Miss Financial Advisor, are you fee-only? That should be simple enough. It's a yes/no question. And I will tell you this, if the answer is yes, your advisor is fee-only, the response will probably be that simple and clear, as in, yes, I am a fee-only financial advisor. Unfortunately, if the answer is no, then I think there is a high likelihood that your answer will come out sounding neither short nor simple, and when it is over, will probably not leave it at all clear that for that advisor, the answer is no. The two words fee only do not apply to me. Therefore, I'm going to suggest an alternative if this is a question you would like answered about an advisor you are working with or considering. Earlier I mentioned an organization called the National Association of Personal Financial Advisors, or NAPA, which is an association of exclusively fee-only advisors. To be a member of NAPA, you cannot receive non-fee-only revenue of any kind. No commissions, no sales loads, nothing. You are not required to be registered with NAPA to be a fee-only advisor, but many fee-only advisors are. NAPA is simply the largest organization of fee-only financial advisors in the United States. To see if your advisor is a NAPA registered fee-only advisor, or simply find a fee-only advisor near you, I would go to www.napfa.org and click on the Find an Advisor tab to locate a fee-only advisor near you. When seeking financial advice, in my opinion, there really are only two sources of advice that is bad. The two sources are potential incompetence on the part of the advisor and/or conflicts of interest that sway your advisor to make tainted recommendations. To address reason one, I close each video with the recommendation that your advisor be a certified financial planner professional. This is signified by the letter CFP with the registered trademark sign following his or her name. The significance of that designation is worthy of a video all its own. However, here I will simply say that the difference between an advisor who has those three letters after his or her name versus someone who simply has the required license to hold themselves out as a provider of financial advice is literally years of both education and experience requirements fulfilled to have become a certified financial planner professional. I highly recommend that you make that a requirement for any person you are considering hiring to provide you with financial advice. Addressing the second is the topic of this video. Commissions, sales loads, or any other type of incentive that could potentially influence your advisor to make one recommendation over another, I feel is a conflict of interest too significant to ignore. Why would anyone make that a part of the relationship they have with their advisor? Why would you choose to pay him or her indirectly in this manner? As I stated, I recommend that your advisor hold a Certified Financial Planner designation. However, I should point out, not every Certified Financial Planner practitioner is fee-only. To truly put yourself on the best possible footing to have the greatest chance of receiving quality advice, you not only need to ensure that your advisor is competent, but you also need to eliminate as many of the conflicts of interest as are possible in the way you choose to pay your advisor for the advice that he or she provides. Choosing to work with a NAPA registered fee-only advisor means that you are seeking the advice of someone who has made it a priority in their practice to try to ensure that their client's interests will not be subordinate to the manner by which they get paid. I'm Jeff Drayton. Thanks for watching. Hey everyone, as always, nothing in this video is meant to be specific advice for you. Advice like that can only be had by working with a financial planner, someone who knows you and your situation. If you'd like to contact me, please do not hesitate to email me at either info@jeffreyadrayton.com or through my website at www.jeffreyadrayton.com. In seeking advice, I would encourage you to speak with someone who is a certified financial planner. This is signified by the letters CFP with the registered trademark sign following his or her name. I would also encourage you to work with a fee-only financial planner. Now that's two words, fee-only, not fee-based, not fee plus commission. Both of those terms mean that the planner or advisor can receive commissions and is therefore not free of the conflict of interest inherent to commission sales. Again, I'm Jeff Drayton. Thanks for watching.